Welcome to the Aussie stock market. Good day, future investors. Remember to like and subscribe to the channel. Ever wondered how everyday Aussies can build wealth? The Australian stock market, also known as the ASX, is a great place to start. Think of it like a massive marketplace where you can buy and sell pieces of Aussie companies called shares. Companies list themselves on the ASX to raise money for growth. You'll benefit from their success. The ASX is open Monday to Friday, 10 a.m. to 4 p.m. AEST. Prices of shares go up and down based on supply and demand. Anyone can participate, from seasoned investors to those just starting. Owning a slice of the pie. What shares represent? Imagine you love a bakery known for its delicious lamingtons. Business is booming and they want to open more shops. To do this, they decide to sell shares on the ASX. By purchasing shares in this bakery, you become a part owner, holding a small slice of the business. As the bakery flourishes, opening new shops and selling more lamingtons, the value of your shares is likely to increase. This means that if you decide to sell your shares in the future, you could potentially sell them for more than you initially paid, making a profit. Conversely, if the bakery faces tough times, the value of your shares may decrease. Owning shares is about participating in a company's journey. It's about sharing in their successes, and yes, sometimes their challenges. But over the long term, the Australian stock market has historically trended upwards, offering the potential for growth and wealth creation. Making your money grow. Dividends and capital gains. There are two main ways to make money from shares. Dividends and capital gains. Dividends are a bonus for being a shareholder. Companies share profits with shareholders as dividends. These are typically paid out twice a year. Capital gains occur when you sell shares for a higher price. For example, buying at $5 and selling at $8 results in a $3 gain. Both dividends and capital gains are key in investing. Find an approach that aligns with your financial goals. Going solo or joining the band. Individual stocks versus ETFs. Choosing your investments can feel like picking players for a footy team. Do you focus on star individual stocks or diversify with a team-oriented ETF? Investing in individual stocks means researching and selecting specific companies you believe have strong growth potential. It requires more time and effort, but offers the potential for higher returns if your picks succeed. ETFs, or exchange-traded funds, are like baskets of shares. They track a specific index, sector, or theme. For example, an ASX 200 ETF holds shares in the top 200 companies on the Australian stock market. ETFs offer instant diversification, spreading your risk across multiple companies. For beginners, ETFs are often a great starting point. They provide broad market exposure, reducing the risk associated with picking individual winners and losers. As you gain experience and confidence, you can explore individual stocks to complement your portfolio. You might be tempted to keep your savings tucked away in a bank account. While it feels safe, there's a silent enemy: inflation. Inflation erodes the purchasing power of your money over time. Investing in the stock market offers the potential for returns, that outpace inflation. This means your money has the opportunity to grow faster than the rate at which prices are increasing, helping you maintain and even improve your purchasing power over time. Of course, investing comes with risks. The stock market can be volatile, with share prices fluctuating in the short term. However, history shows that over the long term, the Australian stock market has consistently trended upwards, rewarding patient investors. By investing, you're not just saving money, you're giving it the chance to grow and work for you. It's like having your money earn more money, a concept known as compounding, which can have a significant impact on your wealth over time. Getting your financial house in order, debt, and emergency funds. Before you dive headfirst into the exciting world of investing, it's crucial to lay a solid financial foundation. This means tackling high interest debt and building an emergency fund. High interest debt, like credit cards, can quickly eat away at any potential investment returns. Focus on paying off these debts as quickly as possible to free up more cash flow for investing. An emergency fund is your financial safety net. It's a stash of cash, ideally 3 to 6 months worth of living expenses, set aside for unexpected events like job loss, medical bills, or car repairs. Having this fund provides peace of mind, knowing you can weather financial storms without dipping into your investments or worse, going into debt. Once these foundations are in place, you can invest with greater confidence and peace of mind. Taking the plunge, buying your first Australian shares. Ready to buy your first Aussie shares? It's easier than you think. First, you'll need to choose an online brokerage platform. These platforms act as your gateway to the ASX. Popular options in Australia include CommSec, NAB Trade, and Self Wealth, each offering different features and fees. Do your research to find one that suits your needs. Once you've chosen a platform, you'll need to open an account and transfer funds. Then it's time to start researching and selecting your investments. Remember, ETFs are a great starting point for beginners, offering instant diversification. When you're ready, simply enter the ticker code of the ETF, the company you want to purchase, the number of shares, and place your order. Congratulations, you're now an investor. Investing in the stock market is a journey, not a sprint. Start small, learn as you go, and don't be afraid to seek guidance from a financial advisor if needed. Your journey to financial freedom starts now. The Australian stock market offers an incredible opportunity for everyday Aussies to build wealth and achieve their financial goals. By understanding the basics, choosing the right investments, and staying committed for the long haul, you can harness the power of compounding and watch your money grow. Remember, investing is a marathon, not a sprint. There will be ups and downs along the way, but by staying informed, diversifying your portfolio, and focusing on the long term, you can ride the waves and come out ahead. So, what are you waiting for? Start exploring the world of Australian shares today and take control of your financial future. Disclaimer: this information is for educational purposes only and should not be considered financial advice. Investing involves risk, and you could lose some or all of your investment. Seek advice from a licensed financial advisor before making any investment decisions.